Good morning and welcome to the Bubba Show for Monday, our recap and preview. Hope everybody had a great weekend. Hope it was weather was better than it was in Chicago, but welcome in. And you know, we have a lot of things happened last week, and first off, my prayers and condolences goes off to everybody in Boston. I obviously a terrible tragedy. Glad that they caught everybody and took care of business. My kudos to Boston police and everybody in Boston. But the week started off last week with some pretty heavy selling pressure in the morning, only to be further induced by the bombing at the race. And markets were in pretty bad shape. But you know, this is kind of what we've been looking for. Tuesday, a natural bounce off of that oversold condition came back in, and Wednesday and Thursday we saw, you know, more of a return to some heavy selling pressure. And I think this is what you can start to look for. You're going to see bounces and sells, and we're going to make, as the way I see it, lower highs and lower lows as we go through. Friday brought us back a little bit of a rally, but I think there's some interesting notes to take from last week. When we look at the earnings, we take a look at Goldman Sachs missed on bottom line. We see eBay missed on bottom line. We see IBM missed on top and bottom line. So the only really bright spot of last week was Google's earnings. And Google's earnings, although not great, their click rate was what they're looking at. That's their revenue generator, was much better. But when you take a look at the overall big picture, following our biggest up week of the year, we followed that right up with our biggest down week of the year. You can see now that volatility is starting to pop back in the market. The pressure is on the market, and the market divergences are becoming reality. We have talked on this show many times, and we can now see that the market itself is really running out of steam, and a market looks like it wants to start to work its way lower. I think you want to watch this 1550 level in the S&P. I think that's a key pivot. So, you know, looking forward to this week, it'll be more of a continuation of earnings. I think you're starting to see that finally people are getting concerned that these companies are missing less than expected earnings. It's important to understand. But really what is happening is the charts, the footprints of the market are really dictating a change in direction. How do we know? We start to see a market that makes lower highs and lower lows. We start to see a wider intraday range, which is important because that's showing a sign of more volatility. Now this week there'll be very little news, so there won't be a lot of news to drive it. But what we should expect to see is a continuation of selling pressure and a continuation of selling the rally here. This goes into when a market is truly starting to change direction. Now what you have to take into consideration is this has no effect on an individual stock that we're trading. You know, individual stocks trade the way they trade. So we don't want to confuse overall market movement with individual stocks. Stocks go up, stocks go down no matter what the market does. So we're talking here about the macro view of the overall market, and you can see by the overall bearish divergences that are being created by the transports, by the Russell, by stocks like Apple. I mean, Apple's under $400. Why is Apple worth 50% less today than it was 6 months ago? But again, we are starting to see, we've seen these changes. We've seen the number of advancing issues declining. We have seen the number of new lows being made getting much heavier. In fact, they're the highest they've been since last November. So all of this in consideration shows us that the market is starting to run out of steam. You also want to take a look at where is the money going. When money starts to go into defensive sectors, that is telling you that people are pulling their money out of what they think is the higher risk and putting it into dividend payers. Not that their dividend payers aren't going to go down as well, but you can see the evaluations of these dividend stocks is getting way, way overdone. And again, we are in bubble territory, and we are looking for this market to continue to correct. And I would see more of this particular week. Remember, you know, I want you to check out the Average Joe Options call on Monday nights. It's a great call. Check it out. It's really awesome. We're having a good time and making some good trades. For Monday, the Bubba Show, we'll talk to you on Tuesday. Have a great day.